James Cordier, founder of Alternative Options, commodity trading advisor. Can you give us a commodity 101 primer for investors?
Chris, I certainly can, and thanks for having me on today. Um, Commodity investing is primarily for the high net worth investor who is looking for alpha on perhaps a small slice of their entire portfolio. Many investors are in stocks and bonds, and generally they do well, sometimes quite well. And then there's also the April timeframe where some of the stocks fell 30 and 40%. So no investments go in a straight line, and nor do commodities. But there's two ways to invest in commodities. One is to have an extremely fast computer that trades crude oil about 18,000 times a day and is trying to make $20 each on every trade they make times 100 lots that they are trading. The vast majority of investors don't have that computer. But what the vast majority of investors can do is they can do a little bit of research on their own and invest what we call standardized, government regulated commodity contracts. So when an investor picks out, say, orange juice, they're not picking Tropicana or Minute Maid. They're actually purchasing the value of orange juice itself, a standardized contract. And by doing a little bit of research, you can decide whether one commodity or another might possibly have a great return. When we like looking at commodities, we like considering a 2 to 3 year time horizon and certainly not day trading. Don't do that, perhaps. Um, Fundamentals in commodities are very discernible. You can read them through the USDA website. You can follow something called the Commodity Research Bureau, and it tells you all you need to know about cotton or cobalt or copper. And then you can make a judgment on your own if you think it might be a good investment. Just one or two examples. The price of coffee recently. Let's use coffee, for example. A lot of people enjoy that in the morning. And now in the afternoons, um, the largest coffee producer in the world is Brazil. Approximately a year ago, Brazil had the worst drought in 100 years. And what do you think the price of coffee did the last 12 months? That's correct. It went up over 200%. Not rocket science, relatively straightforward. Beef prices have recently made the news. They are at all-time record highs. To do a little bit of research for your investors watching today, the cattle herd in the United States is at a 70-year low, probably propelling beef prices. Beef prices increased 200% this year as well. We are here in Florida, for example. A lot of the Florida groves got moved into real estate. They took down orange groves and they developed homes and condominiums. And there was also a couple of hurricanes that came through Florida over the last several years. That really took down the supply of oranges as well. Imagine this, if you a moment, for Chris. Oranges in Florida, the largest cash crop, the largest producer in the world, being Florida, lost production of 90% of the oranges they used to produce for orange juice in a very short period of time. Florida was producing over 200 million boxes. Now they produce about 20. And what do you think the price of orange juice did over the last year and a half? That's correct. It went up 300%. Not rocket science. This is just understanding what the fundamentals are. Anyone can research this, anyone can do that themselves. And that's what we bring to the table for our investors and high net worth investors looking for alpha, interested in taking on a little bit more risk to possibly get outsized gains beyond just stocks and bonds. That's what commodities can deliver for individuals themselves.
James, that was very useful, very concise, very enlightening. Do you have any particular commodities that you've been looking at that may be potentially beneficial for investors? And if so, what and why?
Interestingly, Chris, the commodities that I just mentioned, already made their move. So we're not suggesting people buy orange juice right now or coffee prices right now. Those investments have matured, and we will be looking at those again in the next 12 to 24 months to see if there's opportunities there. One commodity that is up dramatically over the last 24 months is gold. And that is one commodity that perhaps has not reached its crescendo yet. And there are some extremely bullish fundamentals holding up gold at its current level. It is near record high, around $3,400 an ounce, up some 100% over the last 12 months. But we're looking at lower interest rates later this year. We're looking at perhaps an ouster of the Fed chairman. We have a presidential person in the White House making really large calls for lower interest rates later this year. That will likely weaken the value of the US dollar and a very large stimulus for gold prices later this year. So gold's up 200%. I kind of left that out of what has already taken place because the run in gold may not be done. A lot of people are looking at central bank buying that is developing because of a weaker dollar. They are interested in accumulating more gold. And in our opinion, gold probably has a very good third and fourth quarter of this year still to come.
James, that was very useful information. I learned a lot. I think a lot of people will. Thank you for your time.
My pleasure, Chris. Thanks for having me on.